Welcome to this installment of my brief from home. Today, for the first time in weeks, we are seeing different headlines, not directly about COVID-19. Oil has become extremely cheap due to the low demand and high levels of supply. In the futures market, oil even had a negative value temporarily. Now, there are a few things to discuss here, but the first question might be, how on earth could oil have a negative value? Tankers full of oil are arriving in the US constantly, and our supply tanks are full. It's expensive to store oil, especially temporarily. So this cost of storing the oil, along with uncertain sale prices in the future, leads investors to consider that it might actually cost more to store the oil than it would be able to be sold for in the future. But let's dig deeper. Of course, this is going to have a major impact on oil-related companies. Especially smaller companies might go bankrupt if low prices continue. But it's important to also realize that most Americans will be actually helped by cheap oil. Cars will be cheaper to drive, and factories and materials that use oil will all have much lower cost. And this same phenomenon is true for the rest of the world as well. So in addition to the huge global stimulus that's been enacted by central banks and governments, this acts as yet another tailwind toward eventual global economic recovery to help combat the impact of the virus. Thanks for watching this week's brief.